Good afternoon. Let's check in on those markets where we saw Asian side of things closing up in positive territory following a bounce that we saw in U.S. stocks and Wall Street overnight. Nonetheless, the Japanese Nikkei up 2.6%. Hang Seng Index also closing in positive territory above 2%. As we see things right now, you're looking at the European side of things also nudging higher. This is a completely different picture from what we saw yesterday, where we noticed that the relief rally from the previous two sessions was running out of steam. Locally, we saw inflation figures come in at around 7.6% from 6.5% in May, well above the South African Reserve Bank's target range of between 3 and 6%. The rand, as it stands right now, 17.10. It was flat ahead of those CPI figures. What does that mean tomorrow? Will we be getting a more aggressive sub-trajectory when it comes to rate increases? That all remains to be seen, but we will keep you updated, especially with that MPC coverage tomorrow afternoon. Nonetheless, to look at the dynamics of our local markets and also touch on what has been happening globally, we are joined by Carmen Belwana from Absa Asset Management. Carmen, thank you so much for your time. When you look at the markets right now, in particular the JSE, what's driving sentiment?
Yeah, it seems to be risk on at the moment. Market is in the green today and week to date up about 5%. I think it's largely been driven by, number one, the expectation around the Fed and what's likely to happen next week, as well as talk around the Nord Stream gas pipeline being reopened after maintenance. So that's given quite a boost to the market. And then lastly, just the general positivity around the earnings that have come out of the US so far.
Right. I mean, you look at what Apple said around, slowing down when it comes to hiring and spending plans. And you get a sense as though corporate America is preparing for a slowdown, which makes me wonder, are we mistaking a slowdown for a recession?
Yeah, it's quite difficult to actually decipher what's happening. But what we are seeing specifically in the US is a move out of defensive stocks, out of utilities, and more into the cyclicals. I think what the general thesis is at the moment is, in terms of commodities, specifically soft commodities, we are seeing a rollover. So coming down a lot more than I think the market has expected. And that obviously feeds directly into food inflation, one of the key drivers for inflation across the globe. So I think as we see this rollover and turnaround, we're likely to see a lot of support in terms of a slowdown as opposed to a recession. But there is the camp of investors who are looking at a potential engineered recession by the Fed, and therefore remaining cautious in terms of their outlook going forward.
Given what we've seen from the banks that started off U.S. earnings season, what are you anticipating for the rest of the companies that are set to report? Which indications from a financial statement point of view are you going to be paying close attention to?
Yeah, I think earnings season in the US at the moment should largely be looked through the lens of what's happening going forward. And what that means is, what does management do or say in terms of guidance? Is there more negative sentiment, or does guidance stay the same? What we have been seeing as of yesterday, about 9% have come out with results or earnings. And 67% or 2/3 of that has been to positive outcome. So saying that, the expectation that earnings need to see a step down in a decline is probably taking some wind out of that sail. And it seems that companies in general have a feeling that they are doing really well in terms of inflation and recovery from that.
When you look at yields, have yields peaked? Are you getting a sense that is the case right now?
It seems to be, but I think we need to tread with caution, specifically around the fact that if there is an inflationary shock, that's definitely going to give some tailwind to yields as it is. Most likely that we are seeing what is being priced in terms of short to medium term yields is that the expectation is we're likely to see interest rate cuts sooner than had initially been expected. So for me, the key thing at this point is to have a view about what inflation is going to be. We still think there's about 150 to 200 bips increase left on the Fed side, and that's likely to also fuel some concern.
If we are going into a potential recession, I mean, I've been having this conversation with my market watchers over the past couple of days. What are you uncomfortable owning for clients right now?
The key thing for me has always been focused on balance sheets. So when you talk about the finances, look at what the leverage is like, how they've been managing debt. I think maybe one of the positives for companies in general has been around the fact that we've come out of the pandemic, which was a huge shock, but which forced management to relook at what their balance sheet looks like, their capital structure, etc., and realign. So for those companies that have been able to do that and strengthen their balance sheets, I think that is key and number one. The second is to look at those that have pricing power, specifically in a high inflationary environment. Those companies that are able to adjust and dictate prices to ensure stability in margins will probably benefit the most through a recession.
All right, Carmen, let's leave it there. Thank you so much for your time. That is Carmen Bellona from Absa Asset Management, giving us her perspective on what is happening when it comes to the latest market dynamics right now. We will be keeping you up to date with U.S. company earnings and, of course, that MPC coverage taking place tomorrow afternoon. That is it from me. We're going to take a quick break. We'll come back with more news for you, so stay tuned.